In this video, I'm going to be showing you exactly my Forex day trading chart setup. What indicators do I have on that chart? How do they help me make informed decisions within the market? And how they can benefit me whilst I'm day trading. So if you want to find out, hang around, let's head over to the charts and explore the markets. So if you fancy yourself getting into the markets, but you don't know how to get started, then check out my investment masterclass. This is a pre-recorded course which comes with a money back guarantee to say that if you don't make money within the first 12 months, we'll refund you the course value. So that just shows you how confident I am in the education that we teach within this, and ultimately you won't need any other education than this course. So if you want to go and grab this insane education, then check the link in the description called Investment Masterclass. So you can see we're looking at our MT5 brokerage account, which is the trading platform that I choose to use. I like using MetaTrader 5, it's much more advanced than MetaTrader 4, and it's also something where I can put my algorithms on and fully utilize them in the markets. So we're looking at the currency pair pound against the Japanese yen. Now you can see the red is above the green. This is the 8 EMA and the 21 EMA. So overall you can see that predominantly ever since pretty much the start of January 2024, pound against the Japanese yen has been rallying. This is something that we want to focus on because we love trending pairs. So on our daily time frame, you can see the two moving averages that I've got here on my chart. I use this for overall what we call momentum and the direction from a long-term perspective, and you can see that overall we should be buying pound against the Japanese yen. Strictly speaking, just from a technical point of view, not taking into account all the fundamental research that we do as well. So here over here you can see my risk tool, which will help me place my trade in the markets by literally calculating it all for me. I can put this on and I can work out my risk within a click of a button. So fantastic to have that on. So that is my number one indicator. I want to make sure that this is on from a risk perspective, allowing me to trade the markets and work out my exact risk down to the £1 or $1 depending on where you're from. This ensures that my risk is strictly 1% per trade. Now I don't really use the 4-hour time frame, so the next time frame that I use is the 1 hour. So I've got different strategies that I use for different times within the markets. When a market is trending this strongly, I predominantly will focus on the 5 and 15 minute intraday trading. However, sometimes I do like to look at the 1 hour, which is my mid-term trading that I look for. So let's first of all have a look at the 1 hour. So number one is risk tool. Let's make a note of that. Risk tool is the first tool that I use on my charts. It is classed as an expert advisor and it calculates my risk automatically for me, allowing me to enter the markets. You'll see that we can see some of these golden arrows here to the upside. You can see that throughout the chart. If I was to scroll back, you can see them here. You can also see lots of red X's on the top. So ultimately this is the next tool. So number two is called TradeMate. Now why do I use TradeMate on my charts? What this does, it simply identifies where is a pullback that I would be interested in to buy, and has buyers now come into the markets. This tool does this automatically. It creates a pop-up notification on my chart, allowing me to stay informed and notified if I'm doing emails or other work elsewhere, allowing me to then use my first tool, risk tool, to calculate my risk and enter the markets. What I'm doing here is I'm optimizing my day trading time so that I don't have to sit there and watch the charts continuously, but I rely on alerts and pop-ups. So let's zoom in at the latest opportunity that we've seen here. Here was the latest one, so you can see the markets came up, had a pullback, slowed down, and then the first buyer's bars comes into play and closes. So it alerts as soon as that buyer's bar comes into close. Now, theoretically, using my trading strategy of what I like to use, I like to target the previous high, which is up here. You can see targeting up here would be 155 pips or 1,550 points, depending on how you like to calculate it. So let's keep it simple, 150 pips. I would like to have a half distance stop loss, which would be 75, and you can see actually that is below that most recent low, and it gives us a little bit of breathing room. So what I would have done at the time is I would use my risk to reward tool like so, and you can simply drag down your stop loss, tell you exactly where you want to put your loss, and it will calculate the lot size for us. So we can do that by ensuring that it's utilizing our fixed reward to risk in the markets. And you can see that at the time, if I wanted a 2-to-1, which I've put here, look, fixed reward to risk 2. If I update this to say 3, you can see that it's now updated my take profit, worked out my lot sizes, and predicted exactly what that needs to be. But I'd like to keep that down at 2. So all I would simply do is put that at 2. It's already worked out what my 1% risk is of my trading account, and then all I'd have to do is click buy. But because obviously this is working in live time, not historically, I can't put it back to there. When we look at this, ultimately TradeMate has highlighted an entry. It then highlights a potential exit. So if I was to zoom in, you can see this little red X is saying momentum has started to die out. Now might be a good time to exit. And if you didn't exit, up here would be another time to exit. That has fallen in line with where my take profit was, which was targeting the previous high. So anywhere between these two levels would have achieved a 2-to-1 on the trade. Bearing in mind that if you saw the previous entry, you may have gone long. It wasn't really a deep pullback, so you may have missed it. Hopefully you did, because not every signal is something that you want to take. You want to be very picky in the ones that you take and ensure that you have a good pullback. So all that would have done is alerted us to say, here may be a potential pullback that you should look to enter. Now go and do your analysis to decide whether or not you want to join that position. So TradeMate is number 2, fantastic tool. Now to the fun part, we're going to be going down to the 5 and 15 minute time frame for day trading, which is one of the best time frames that I enjoy trading. So let's now go down to that. Guys, check out our giveaway in the description. Just make sure you click the link if you fancy yourself a chance at winning some awesome prizes, from our famed algorithms all the way to our online courses, our weekly lessons, you name it, you can get your hands on these prizes for free. So make sure you check out the raffle in the description. So we're now on the 15-minute time frame, and you're probably going, what on earth is all of this? So let's have a zoom out. So now you can see we've got this tool down the bottom called Cluster Algo V2, and we've also got these blue dots and a large big blue dot underneath the price. You can see the time frame here, we've got the 50 and 200 moving average. We've got this new indicator, which is Cluster Algo. So that is number 3 on our list. And you can see all these lines on here, these red lines, gray lines, and green lines. These are called our GMT pivot points. They are GMT adjusted time zone pivots to see what UK pivots would look like, to make sure that I'm seeing the true reflection of what a pivot point should be for UK trading hours. Now we utilize this to see levels within the markets and ultimately take advantage of those levels. So some great stats for you. If price opens above this gray line here, it is called the pivotal point. So if you imagine it like a seesaw, then it means that there is a 60% chance that price will also close above it. So you can actually see in this instance, it opened above it and it closed above it. Here, it actually opened below it and closed above it, so it didn't work out on that one. Here it opened above it, closed above it, opened above it, and still moving above it. Again, prime example here, opened above it and carried on rallying throughout the day. Now, the red line is our support zone 1, support zone 2, and support zone 3, which is a third one. So you have 3 each side, 3 red and 3 green. So this is, you can see R1, R2, and R3. So these is resistance 1, resistance 2, and resistance 3. So having different resistance levels when we're looking at the markets as well. So if price is opened above the pivot point, the first level of support is the pivot point. And you can see a prime example here. If we zoom back to look at the levels and how they react to price, you can see prime example here. Look, price opened above this, came back, tested the pivot and bounced straight off. We then got some dots, little dots saying get ready to buy, and then a blue dot on cluster says confirmed buy position, so saying to buy in here into the market. So when we use these all together, we've done our daily analysis so we can see what the overall market looks like, and then when we drop down to smaller time frames, Are they in confluence with the same direction as those higher time frames? So once we see this entry, we would then look to go into a buy position. The first place where it's going to stop is, you guessed it, R1. So if we see price now stall around here, you'd consider potentially not holding the trade. You can see we saw a clean breakthrough, price continued to move up and it hit R2 and then it stalled. So you would have considered potentially closing the trade at the end of the day as the market stalled around that high level there. Let's move on and now have a look at some of the other entries that we can see. So again, here's quite nice. Price opened above the UK pivot, rallied, broke through R1, broke through R2, hit R3 and rejected it. Now R3 is the strongest level, just like S3 if that was a support level too. So you can see how price came up, hit that, rejected it, and then came down, broke down through R2 and bounced off of R1 and continued its rally back up to R3. Again, the next day you can see price came down, tested the UK pivot, went all the way up to R1 and rejected it. So you can start seeing the pattern of how you can utilize these tools for your intraday trading and how you can ultimately take advantage of them, you know, throughout the markets. Now, here's an interesting part. Can you see the red? These are for sell signals. Now, we wouldn't be looking at sell signals because if we went back all the way to the first step, you can see that when we looked at our daily time frame, the market was in a prolonged uptrend all the way since the start of 2024. So you wouldn't want to fight against that even though it's on a short time frame. So you simply just ignore these and wait for the moving averages to cross back into that direction. And you can see here, fantastic opportunity. So price rallies all the way up, opens above the UK pivot point, then it comes all the way back down and tests it. So let's have a look at this one on the 14th of May, as this is a great example. And then when we come down to the 15 minutes, we've got the two indicators on here, the pivot points and the cluster. So price comes down and it literally hits the pivot point to a pip, a nice green buyer's bar, rejects it, and then we get our cluster signal down here saying indecision, time to potentially buy with this divergence. And we then get an entry to jump in. So if you're entering into this trade, the first place that you're going to be looking to enter is back at that previous high. And if it breaks through that, the first place you're looking at is R1. So arguably we're looking for around 70 pips. So we'd like to have around a 35 pip stop loss just below here, giving us our 2-to-1 reward to risk. Now, the best part about using these indicators like GMT pivots is it gives us clear levels of entry. I don't need to sit here drawing my support and resistance zones. They're automatically calculated at midnight every single night and are very accurate, as you can see on the charts, just how well they respect these levels. So I focus a lot around those levels using the daily overall direction, which we can see has been in an uptrend since the start of the year. And again, that's really due to the Bank of Japan's interest rates being extremely low in comparison to the pound, which is a lot higher, which means that you are earning interest on buying the pounds against the Japanese yen, or for those people that don't know, is swap rates, overnight holdings. So very favorable to hold this trade to the long term. But also then when we come down to these smaller time frames, we see some great intraday trading opportunities to be able to buy into that long-term momentum and get nice 2-to-1 reward to risk trades out of it. So overall, my top 4 indicators to put onto your chart is the risk tool, trade mate, cluster, and GMT pivots. It reduces my overall screen time when I'm focused on the charts and allows me to crack on with my day-to-day. It saves me time from having to draw in levels, and it also saves me time on identifying where pullbacks and opportunities can arise. It keeps my emotional state to a minimum and allows me to not emotionally trade and literally take trades on a 2-to-1 reward to risk, knowing full well that we're really tipping that seesaw of probability into our favor by having all of these different tools and analysis in our favor to make that trading decision. Overall, I hope you have enjoyed going through my chart setup, what indicators I use on my charts and why, and tipping that seesaw in our favor for probability. If you've enjoyed this video, make sure we smash that subscribe button, hit the like button. And if you use any of these tools as well, then make sure we get in the comments and give me your feedback on how these tools have helped you with your day trading.